Now for more is Jamie Baker, Senior Airlines Analyst at JP Morgan. Jamie, thank you for being here. What do you make of those loss estimations? Is there any recourse for airlines at this point?
Well, the IATA forecast is similar to our own for North America. I mean, if I was to characterize my 2021 and 22 forecasts, it would be bad and then pretty good. You know, we've long assumed that, a vaccine would be achieved and that 22 would be the year, the primary year of recovery. Hopefully that's pulled forward, see a little bit of recovery in the first half of next year. But by no means have we ever had a robust, or at least, since March, had a robust forecast for 2021. It's still going to be a challenging year for the industry. But thankfully here in North America, everybody is flush with liquidity at the moment.
And Jamie, by 2022 and onwards, you think the U.S. airline grouping as a whole are kind of net beneficiaries of this period because they're in a stronger position than some global rivals?
Yeah, it's important to note that going into the downturn, North America drove about 20% of global, flight activity, but almost 2/3 of global airline profits. So we were better positioned going in. After 9/11. There was a cycle of failure, a cycle of bankruptcy, a cycle of consolidation here in the U.S. We're not expecting to see that domestically, but we are seeing precisely that internationally: failures, bankruptcy, M&A. And that's going to make international markets more profitable for the likes of, Delta, Air Canada, American, and United. Once we get out of the downturn.
That's really interesting. Yeah, I would suspect that consolidation at this point in the U.S. Would be restricted by regulators. But I'm curious, how important is holiday travel for these airlines? And what are your channel checks telling you about pricing this year, especially relative to previous years?
It's a matter of perspective. This is going to be, probably the worst Thanksgiving on record, but that comes after the worst third quarter on record, which happened to follow the worst second quarter on record. So I'm not really telling, you anything that you didn't already know. I think for anyone flying this week, particularly for those that haven't flown since February or early March, there will be a strong sense of normalcy to it all. You're going to wait in line to check your bag. You probably got a reasonable deal on your ticket. You're going to wait in line for security. Shake Shack may not be open. You still can't get a Diet Coke on Delta for reasons that aren't entirely clear to me. But I think for the traveler experience this year, today, Wednesday, Sunday, those are all going to be, million passenger counts, which is sort of the new normal for these depressed times.
And Jamie, what about that position that many people have that the airlines most exposed to premium business travel will suffer over a 5-year view, not just in over a 1-year view? And which of those airlines in particular?
Yeah, we've never been quite as pessimistic as some. We absolutely expect corporate travel to rebound a little, less quickly. This week is a good indicator of consumer health. But we need to see businesses, such as my own, start to send, road warriors back out on the road. We think that probably takes 2 to 3 years to get back to normal, but we are not of the view that business travel is, forever impaired because of the technology that you and I are using right now.
Jamie, great to see you as always. Thanks for joining us.
Happy Thanksgiving. Take care.
Shepard Smith here. Thanks for watching CNBC on YouTube.